if you're a beginner and you want to start trading volatility indices, then I've got the strategy just for you, right? So right over here, what I'm going to be installing, right, is the 2 moving averages on my chart. Then I've got the RSI over here, but let me just add a moving average so that you can see exactly how this thing works, right? So let me just show you the moving averages first. So for the first moving average, we've got the moving average of period 200, right? So let me just go here, period 200, method exponential, apply to close, then it's so like purple on my chart. Then the second one is the 50 moving average, right? So it's exponential and apply to close again, right? Those are the 2 moving averages that we are using, right? Then for the RSI, I want you to set this as exactly as it is, right? So for the period, I want you to use 21 because the 14, most people like using the 14, but as for me, it just reacts too fast, just for nothing, right? It's better that I use a stochastic if I want an indicator that reacts fast, but now we are going to be using the period of 21, apply to close, right? And then it's blue, right? You can choose any color. Then I'm using it a little bit thicker, it's 2 pixels, right? But if so that you guys can just see what I'm talking about, but usually you like to see it as a thin line. Then over here again, for the levels, I want you to label these levels. I want you to take these levels exactly as they are, right? So I want you to label level 40 as still buy, we'll be still buying, right? Then the level 50 is equilibrium, and level 60 is still sell, right? So those are the 2 levels that we are going to be using, right? Then click OK, right? Then we want to add a moving average in this indicator window over here, right? So we are going to be dragging our moving average, right? You can also use this strategy on your phone. I just use my laptop because it's a little bit simpler for me to record when I'm using my phone, right? So over here, we want to set this to period of 1, right? Method exponential, right? Also method, you are going to shift to simple, right? Then apply to, take note of the apply to, either you apply to previous indicator data or first indicator data, right? So let's just choose previous indicator data, right? Then I want to select, make it red, right? Then I click OK. Okay, let's add another moving average to that. Then let's make it this one a little, let's make this one black, right? So for the moving average, we're going to be using a moving average of period 7. Method is simple, apply to previous indicator data. Then let's pick black. That's it. Let's add this thickness. Let's make it 2 pixels. Okay, then click OK. So I guess, yeah, you guys can see, right? So I want to use those crossovers over there. That's what we're going to be using for our entries, right? So over here, you can just remove this over here, right? So if you copy the levels exactly as they are, then let me just explain a little bit of how we are going to be using those levels, right? So I think it's better for you guys to watch the strategy that I talked about, the RSI. That's when you be able to understand this a lot more easier. You understand it completely, why we'll be using these levels exactly, right? So okay, so when I'm using the RSI, I don't like to use the overbought and oversold levels. Why? Because they don't work. They usually don't work, right? Of course, they work here and there, but the best strategy is this one, right? So these colors aren't just doing for me, right? Let me just change this color. You can use, I can use the moving averages. Aqua is blue, like, right? Then just like that, right? So now it's a little bit clearer, right? So now we can see exactly what you are talking about. Those colors went just right for me, right? So over here, right, why when you are selling, right? So where, how do you determine the trend, right? So when you are determining the trend, of course, there's the market structure point of view of it, right, where we check if the market is creating what, a series of lower lows, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, blah blah blah. And I think you know this already, right? If you don't, then you need to read more on price action, right? Then we can also use these moving averages to determine the what, to see where the trend is, right? So if the moving averages are crossed for a sell, right, if the moving averages are on top of the candlesticks, it means that we are going down, and if they are below the candlesticks, it means that we are going what, we are going up. That means the trend is a bullish trend, right? So like over here, if they are below the candlesticks, it means that we are going what, we are going up, right? So right here, when the moving averages are showing that we are in an uptrend, right? So usually this RSI, right, it comes back. Where are we going to be getting our entries? The RSI comes back and tests what, the 50 level or the 40 level, right? So over here, right? So the 50 I labeled it equilibrium because we can use it for both for our buys and for our sales, right? So it's just in the middle, right? So over here, when the RSI pulls back to the level, to the moving 50 moving average, usually it's around the 50 level on the RSI, right? And if it pulls back to the 200 moving average, it's usually around the 40 level over here, right? So how are we going to be entering, right? So if you want to understand the RSI, how the RSI works, then I suggest that you watch the video on the RSI, right? So that it's easier for you to understand, to get what I'm saying in this video, right? So over here, right, after we've determined the trend, right, we are going to be waiting for our pullback, right? So over here, right, we've got our pullback over here, that we are going up and we crossed over, right? When we get a pullback over here, right, is pulling back over here, right? So we are going to be entering when the RSI and the blue line cross over here. And these colors, you can use any colors of your choice. I made a mistake over here and the colors aren't just right for me, right? But you can use any colors that are visible to you, right? The colors don't matter. What we want is the crossover, right? So over here again, we put back to the 200 moving average. And so we're going to be entering when the market pulls back to either to this two moving averages or around them, right? Just like here, it broke past the 50 moving average a little bit, but it didn't break past through it. Right over here again, it's so like testing, but this one was a little bit of a breakout, because as you can see, we also broke our 40 level. So we don't enter if we break the 40 level. We only enter if we respect the 40 level, like over here, right? You enter your trade, right? And usually, if you can even continue holding that trade and just adjusting your stop loss to be in profit, right? Because we are truly in what the 200 moving averages has already shown us that we are trending up, right? So it's just better if you just hold that trade, but you have to keep on moving your stop loss, because as you can see, there are instances like this where we get major pullbacks, and all your money can get swept out, or you can go back to break even, right? So it's better to just, if you enter here, right, you keep on adjusting your stop loss, or you just enter when the RSI crosses over here. But I don't want you to enter at these levels over here, right? So when the RSI is ranging above the level 60, right, over here, those around the level 70, right, this just shows that the market is truly trending, right? That's why I don't like the overbought and the oversold levels, because when the market is at the overbought and oversold levels, people will be anticipating that the market will start selling there, but in reality, it just shows that the market is truly trending to the upside or to the downside, right? So that's why I don't like to use the overbought and the oversold levels, because they just confirm that the market is trending, right? So over here again, we continue getting our entries when the market pulls back to the 40 moving average over here, for the 40 level, and the 200 moving average over here. We enter again. So that's just what you have to look for, right? Let's look for a downtrend, right? For a selling market, right? So it's always better to just check the higher time frame, the 4-hour time frame, to determine where the trend is, right? So over here, we've got our breaking market structures is to the downside, and we are continuously going down. So we're in a downtrend, and wait for our moving averages to cross over here. And after they've crossed, we're now starting to look for our entries, right? So over here, we're going to be entering when the RSI, when the market pulls back to around the 50 moving average, right? And we're going to be entering when the RSI respects those levels, right? So the crossover doesn't really matter, but want the RSI to pull back to either to the 50 level or to the 40 level, and start to consolidate or show so something like you're respecting, right? So over here, you can draw your trend line over here. There's a breakout, you enter over there, right? That's just how you use the RSI, how you use this moving average, how you use this strategy, right? Then I usually use this strategy on the 5-minute time frame, because I get more entries there. The 15-minute time frame, you get an entry here and there. It's very rare for you to get those entries, right? So I usually use the 5-minute time frame for my entries, right? So as you can see over here, we're trending down over here, breaking structure to the downside, right? And the 50 moving average cross over here, right? Now we have to wait for a pullback around the level of 50, right? And the 50 moving average. So over here, you're going to be entering over here, somewhere over here. You can just use your candlestick confirmations for you to get an earlier entry, unlike waiting for the RSI cross. But if you're a beginner, you usually don't know much about candlesticks, right? So it's just better to wait for those crossovers for the RSI to cross over, right? So you can enter over here again, right over here. When the market pulls back to the 200 moving average, you enter again over here. But yes, another trick that I hadn't told you yet, right? So if you had stuck around till this time, right, you be able to get this trick, right? So usually when the market pulls back to the 50 moving average, it just gives us one leg, right? And in some instances, it comes and gives us another leg forming an M. But whenever the market pulls back to the 200 moving average, usually the RSI forms something like an M. Here we've got an M. Let me zoom. Let me move this side over here, right? So here we've got an M like, and the RSI is also giving us an M, right? So when the market pulls back to the 200 moving average, the condition that we are going to be using to enter is that we are going to be entering when the what? If there's a formation of an M, right? Otherwise, we are just going to be using our 50 moving average for our entries. Other than that, there's nothing that you can do, right? So over here again, we've got, let me use my pencil. So over here again, we created that something like what, an ugly M. This was an ugly M, right? Over here we enter on the crossover and we hold, right? You can also use your trend lines for your entries and anything that makes it simpler for you. But if you don't know trend lines, then you just stick to what, to waiting for that crossover, right? And over here again, we are still respecting, as long as if we respect the level 60 and the level 50, we are going to be entering those trades, right? So over here you can enter again. So that's how you just use this strategy. And if you want to learn how to use the RSI, then I suggest that you watch